It's that time of the year, guys. New year, new me. New year, new goals. Just kidding, guys. I'm going to explain to you why those extra credits and those big refund checks might set you back 1 or 2 years in getting your home. Let's go. Happy New Year, guys, and tax time is among us. Now, I know you're probably sitting around waiting for that W-2 to come in the mail. Now, before you run out and get that refund check, I just want to go over a few things with you. Now, full disclosure, I am not a CPA or a tax advisor, so any financial advice that you get online should be redirected to them to meet your financial goals. Now, with that out of the way, please let your tax advisor or CPA know what your financial goals are for the next year or two so they can assist you. And this is bad. We typically rate and grade our tax preparers based on how much money they can get us back. Think about it. We usually hear that our friend, relative, loved one gets $7,000, $8,000, $9,000 back. So we typically want the same thing. What they're not telling you is how they're getting that big refund check. Now to the topic of this video, tax write-offs. Now, in my opinion, tax write-offs are one of the top 3 deal breakers when getting approved for a loan. Now let me explain why. Now let's pretend you made $80,000 last year, and now you're ready to do your taxes. Now most people, if they hear that they're going to pay some money back, or they're getting a small refund check after making all that money, they start pressuring and telling their tax preparer on how their friend, relative, or loved one got so much money back. And now that's a bad thing because you should be focused on your goals and your financial situation. Well, what does that have to do with you buying a home? Well, a lot. So let me break it down for you guys. So basically, again, just for the purpose of this video, you made $80,000 last year. You wrote off about $30,000 in tax write-offs, which makes your total taxable income, which we will use for a mortgage, at $50,000. Now, of course, make sure you plug in your numbers and your tax write-offs to make sure these numbers make sense to you. But as you can see, it'll be a big difference from an $80,000 pre-approval than a $50,000 pre-approval. Now, this information is very important, especially for my self-employed individuals. Now, I had a few people that made a lot of money that year with their business. For example, one lady I had, she made about $60,000 that year, but she wrote off $58,000 in her business, and she now wanted to buy a brand new home. But basically, that $58,000 in tax write-offs made it look like on paper that she only qualified for a $2,000 pre-approval, which we all know is nothing. You can't buy anything with $2,000. So guys, be very, very careful. And also, please let your CPA or tax advisor know before they start doing their magic on paper. Now, if you've been watching my videos, you know that I preach that your income is very important. If you haven't done so already, watch these videos right here. And when it's time for you to get pre-approved, your income is going to be as high as possible, so that way you get as much money as possible in your pre-approval. Now, question of the day. Did you guys know that tax write-offs could hurt you? Drop your answers in the comment section below. Again, Happy New Year, guys. Thanks for tuning in. Make sure you smash that like button, subscribe to my channel, and make sure that notification bell is on, so anytime I drop a video, you guys get notified. I hope you guys have a great day, great week, and an awesome year. I'll see you guys in the next video.